Now, the local index set to open to mixed trade this morning despite the boost from Wall Street overnight. On Monday, the JSE was firmer along with its global peers as markets attempted to rebound at the start of the new quarter. For an indication of how the markets are likely to fare this morning, we're joined by Carmen Mpelwane, Portfolio Manager at Absa Asset Management, and she speaks to us via the virtual platform. Carmen, good morning to you. A quick overview of how the latest market developments are shaping up at the JSE.
So this morning we've definitely opened up a lot stronger. JSE up about 1.59%. And as you've mentioned, on the back of the strength in the US overnight. A lot of that has come on the back of the release of the manufacturing numbers in the US, which have shown a softening more than consensus was looking for. I think the key aspects there is in relation to order numbers. So we've seen a significant decline in new orders, as well as an indication that employment numbers are also likely to come down. I think that the market's likely to look towards the end of the week when we're looking for the U.S. non-farm payroll to see whether or not the quantitative tightening is actually yielding what the Fed is looking for, which is a slowdown in the economy, and that will come through an indication of a slowdown in employment. So definitely some macro numbers to focus on for the week, and we're seeing that the JSE is impacting or is reacting to that at the moment.
Let's quickly touch on commodities. Oil prices, to be specific, rising, and likely the supply cuts, including there gold, holding ground at the near 3-week peak. Give us an update on those market moves.
So the expectation is that OPEC Plus, when they have their meeting tomorrow, will announce that they are looking to have cuts in supply. Initially last week, I thought it would be between 500,000 to 1 million barrels, but it's likely to be above 1 million as it stands at the moment. And the motivation behind that is that with the expectation that we're likely to see global economy starting to slow down, we expect demand to come down. So that will be a supply reaction, and looking to put a floor of about $90 per barrel on the oil price. On the gold side, that reaction has largely been due to a decline in treasury yields across the globe yesterday. And I think a lot of that has come on the basis of the expectation that we are likely to see a slowdown in the next few weeks.
Let's speak about NERSA, that's the energy regulator, missing its own deadline to finalize a new method for determining the tariffs for Eskom, municipalities, and all other electricity licensed suppliers, specifically about what charge could these entities start charging. So what's the latest on that front?
Yeah, there's been a lot of volatility and uncertainty around this. We know that Eskom did take NERSA to court a few months ago, and that was in relation to NERSA saying that the previous tariff methodology was expired. That's from 2016. Eskom did win at that point, and so NERSA's gone into consultation, but they say that they extended the deadline, which was the 30th of September, will not be met due to the fact that they were unable to get technical specialists and drafters on board. And so the indication now is that we're likely to see a conclusion towards the beginning of next year. I think ongoing in terms of uncertainty across the board, NERSA has also consulted with the general public, so we'll have to wait and see what the outcome of that's going to be.
Let's conclude the conversation with company news. Pick n Pay publishing a trading and earnings update for the 26 weeks, which ended on the 28th of August 2022. Help us make sense of their numbers.
Yeah, so on a top line basis, definitely very strong. Seems to be an indication that Pick n Pay did better in the last few weeks of that 28-week update, sorry. The first 18 weeks was a little bit lower in terms of top line growth. And so definitely an indication that there is market share gains there. Going down to the bottom in terms of earnings, definitely much stronger as well. A definite beat on consensus, keeping in mind that for Pick n Pay, the way their earnings are split, generally we've seen historically 30% of earnings are generated in the first half of the year. So just as an indication, and what it is yielding is that we're likely to see very, very strong numbers coming out of Pick n Pay on the basis of market reaction. We've also seen share price up 7% yesterday on the back of this news.
Carmen Mpelwane, let me thank you very much for that markets update. And she is the portfolio manager at Absa Asset Management. How could I possibly forget her title? Carmen Mpelwane, thank you very much indeed for that markets update.